Welcome to today's morning market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now we'll start today's video with a bit of an overview of the markets. So far today we are seeing broad-based gains really across the board. We're seeing bonds trading slightly higher, so we're seeing these yields, particularly on European debt, creeping lower. Again, I think this is broadly driven by that stimulus which we got from the ECB last week. We are seeing the dollar really reign supreme so far this morning in the currency markets, which is weighing a little bit on gold in the commodity space, but broadly in the commodity area we are seeing gains, particularly in oil, which is now looking like pushing on towards those mid-40 levels, where I do think we are going to start to see it run into some resistance following what has been quite a strong period for oil. If we look into the equity space, we are seeing gains in the equity indices as well. Again, I think this is more pairing the losses that we saw yesterday. I think European stocks could be facing a potentially difficult period because there wasn't really many catalysts for yesterday's decline, but what we have seen is, given the fact that we've seen the euro really extend these gains over the past week or so, I'm starting to wonder if we are going to see this start to weigh on European stocks in the coming weeks and months. If we think about what the European economy has been like over the last year or so, it's been primarily driven by that weaker euro, helping the export market and helping the manufacturers in the euro area as part of this, what has been a very mild recovery. There hasn't really been too much else driving the recovery in the Eurozone as much as that weaker currency. So the fact that we're seeing the currency strengthen, despite the fact that we're seeing the central bank provide all this extra stimulus, could be quite challenging for these big exporters, and therefore I think it'll be interesting to see just how well they do cope in the markets. Now, if we look at what we're seeing today, again, it's looking like a bit of a quieter day. A couple of things to point out. First one is the Bank of Canada CPI readings for those trading the loonie. CPI data, of course, is very important. We've seen Bank of Canada being one of those central banks which is being quite active as of late. We've got some speeches coming from Federal Reserve members now. Given that we had the meeting this week, it's going to be very interesting to see what exactly the position of these members are, when, and more importantly, when they expect that first rate hike. I think the markets have finally come around to the idea that we're going to see at least one rate hike this year, potentially even two. So it's the interesting point is going to be, when are we going to see it, and is the election cycle going to feed into the timing of these rate hikes? Of course, we're not going to see the Federal Reserve members actually suggesting that it will, but it'll be interesting to see what their outlook for rates actually is, and what could potentially influence it as well. Of course, we've had the dot plots, but it's about what could influence the decision also. Just get a little bit of extra insight here. So we've got a few of these. We've got the Baker Hughes US oil rig count as well, which again feeds into these oil prices as well. If we continue to see the oil rig number coming down, then that would suggest that we are facing potential production cuts further down the line. But overall, it is looking a little bit quieter today. University of Michigan consumer sentiment reading as well, potentially of importance also. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.